All right, we're good to go. Good morning, YouTube. Good morning, trade pros. Welcome to our morning market update for Wednesday, February the 18th. This is George Popazov, Trade Pro Academy. We have an interesting day ahead of us today. We have FOMC meeting minutes. It's not a decision. There's going to be no rate announcements or any change of policy to the Federal Reserve, but we will have the meeting minutes to this afternoon at 2 p.m. Eastern time, and there will be volatility to the market, so something you should be aware of. All right, I'm gonna go and just show you the camera, turn it on, and we're gonna rock and roll. All right, let's turn on the camera. I don't know why it's all the way back there, but it is, and here it is. Oh, look at that! Look how close I am to the screen. Something's going on there. All right. So in this morning markets update, we're gonna not do a lot of yapping. Well, I'm not going to before we turn around and look at the charts. We'll get into it really soon. Futures are up all across the board this morning. We see some risk on tone heading into the start of the session. European equities are entirely green, which is, also reflective of the risk on tone. Fixed income is up 4 basis points from yesterday's 4.029, and we're backing away from that 4.0 level that was important, really important. That's a big support there in the fixed income market. All right. Key focus today is FOMC minutes from the January meeting. So there, it's still fresh data. We're going to get a look at what was happening behind closed doors that led to the FOMC's meeting, what they discussed, any forward-looking things, and any changes to the statement, the actual statement itself. The only thing they really release in the minutes is a change to the statement if there's any revisions, and also what was said during the meeting. So, it could generate some volatility. There's no rate decision or no chance of a cut that's baked in, not yet at least. All right, cuts are forward looking in the market. After the latest jobs report numbers, we have strong jobs data, and after the latest CPI, which is the inflation reading, we have softening inflation, which is a perfect scenario in an environment for the Fed to cut. So they're getting what they need to see to cut. Jay Powell has a couple meetings left. I think actually just one more or two more, and then he's out of the Fed, and Kevin Warsh is expected to replace him. So that's on the Fed front. Expect that volatility this afternoon because it is a Fed day with FOMC meeting minutes. Also expect for the market to start slowing down mid-morning. It'll be one of those things where 9:30 to 10:30, the initial hour, maybe the only hour worth trading. We'll have a look at what happens though in real time, and obviously always be reactive, not predictive of the market. Very important. So we'll react to whatever takes place. I think bulls are starting to shape up for a run. The question is, do we have enough to start a new rally upward? That's what we're going to try to answer when we turn around. All right, commodities, gold's up 0.7%, back above 4,900. All right, silver's kind of recovering, trading above $75 an ounce after yesterday's 2.5 percentage drop. Pretty big drop. All right. Silver's meme coining right now. It's just going all over the place. It's not trading reflective of the value of silver. It's trading on trading behavior and hype. All right. It's going to resume normal operation and soften out, and that's when I would probably start looking at it again. I do like silver. I used to trade silver and gold futures. They're wild markets, but they're very good, consistent trending markets until they go sideways and consolidate. Then they're very kind of useful range bound markets too. Supports hold really well, so the resistances, which is all you could ask for to start putting on some range trade opportunities. But I haven't in a very long time. I focus on the ES futures now, and there is opportunity though in the precious metals complex. All right. WTI is up 1.3%. It's pairing some of Iran's latest losses, Iran-based news. Trump said he's close to major war with Iran. Then people realize, not Trump, but um, that's what the talk is on the street. Trump didn't say that himself. That would be very, very bad. Another war starting, and it would be very actually bullish for oil. It would send the price skyrocketing. Copper's up 1.1%. Crypto, Bitcoin's flat, hovering around 68,000. Ethereum is at plus 2%, back above 2,000. And when crypto's struggling when there's less Lamborghinis and Ferraris flying around in South Florida. That's I don't need to see an update on how the crypto market's doing. I see it on the street. Uh, today's catalyst to watch, we got durable goods orders, industrial production, and housing starts. We got some of that data already, but top of the hour we'll have some more. Atlanta GDP, Fed forecast, FOMC meeting minutes for January. That's the key event and the volatility trigger for today. All right, and then we got some earnings after the bell for not really the biggest companies, but we do have some earnings that you should be aware of. Okay, that's the day. Let's turn around and let's have some fun with our fun charts. Who doesn't like to have fun with charts? Who thinks fun is anything but the charts? Show me that person, guys. Show me that person right now, and I'll agree with them and resign my position. All right. Let's take a look. Just kidding. Obviously, come on. Let's take a look at the charts here and the trading plan. What I'm going to do is show you the notes. You know that it's good for you to kind of read along. So let me open this note. Let me cough to the side. Don't blow out your eardrum. Unless you want me to, then I will. Um, Actually, I think quite the opposite with our morning market updates. Some people say that they're low in volume. I'm using this like Shure mic that needs crazy amounts of decibel gain for them to operate properly. So I'm that's what I'm going to blame it on. All right, here we are with today's session. We got to tell this story. We have three stories to tell, two stories to tell today, and then one trading plan construction. So yesterday we go ahead and open up at 68.37 quarter. All right, down here. Why is that important? Well, you're kind of opening close to the bottom of the range, and the low of the overnight yesterday swiped below the low of the prior day. So kind of opening up the downside trend. Our flip zone was 68.80, meaning that this is where we wanted to stay short below. And if I zoom out a little bit on this chart, you'll probably understand why relatively quickly. Okay, this is why we had a really big top. All right, so we said going into this open today, as long as we stay below this level, we're going to start shorting the price action. So we opened up 68.37 quarter. We watched it rally up about 20 points. We had a level at 68.55. We said mid 50s will be a decent level to try the first short. Stay patient below our level of but below our flip zone of the 80, we're looking only for short opportunities. Don't chase the upside. Let the downside come to you. The downside came to us. I believe, hit it over the head with a trade here and took some of that downside, extended it a little bit. Could I have done a better job running it? Yeah, in hindsight, you could always make your trade better, but hindsight is it's hindsight. All right, so that's where we got the short. The team was pretty impressed in the trading room, as was I. Even though I know this stuff works, it's always great to see it come together. Because the 55 was where we were planning the level, but the order flow showed us very clearly that the upper 50s were the right way to go. We got that short on, qualified it with order flow and MBO. We sold it into imbalances, and we got a quick reward. This thing pretty much as soon as we sold it with zero heat on that trade, like one tick maybe max, we started dumping, and it was pretty big dump from the 56 to the 04. That's about a 50-point dump off of that level the moment we hit the trigger, the button. So we sell off and we continue selling off and we continue selling off, and we set the prior day low here at 67.91 was the PDL, the prior day low. Then the market reversed mid-morning on us. We said that could happen. We even discussed why that could be the case. All right, we had big delta here, big stock traders towards the bottom. Three attempts to puncture that low. We couldn't have a new low, so we were ready for buy stops. And the buy stops stopped out the shorts in short order and very quickly. Rallied all the way back up. All right, to pull back into the opening range low, to then just the buyers picking it up again to set a higher low here, and we extend it to a new higher high on the trend and new higher high on the day as well. 68.83 3/4 is the mark on yesterday's high, and then we pull back into the support level here in the mid 50, where more or less we close around there at 63.5. Interesting because that mid 50 was a level all day long. And the pullback was pretty contained at that level as well. So it's an example of a resistance flipping to support. We get the close on the session, like I said, on 63.5. The range is 92 and 3/4 points. This is significant movement here. It's not a joke. It's a pretty good up day. 1.84 million contracts. That's not great volume, but it's average. Like volumes are lower these days on the ES than the heyday of trading, just because a lot of people went to prop firms, and when you trade at a prop firm, you don't put volume on the market. You're trading the market, but you do not benefit the market as liquidity. You are not a liquidity provider, so you're off the book. Um, Volume's low, but on an upside day, it's not bad. And the great thing is that we didn't have the big continuation to the downside. That would have been bad, but it wouldn't have been that bad either because a down day on low volume usually reverses. So what we have in the makings here is a bottoming out pattern over several days, spanning almost a week and a half now. And it looks like the bulls have managed to hold on to the low and set the new low. Goldman Sachs institutional desk sent out a report to their institutional clients yesterday saying that they believe that the low is in on this move and it's time to head up. All right. Interesting stuff. Doesn't mean Goldman Sachs is right. They're sometimes wrong, believe it or not. But there is squawk on the street with people's optimism on the bullish side starting to resume. The story overnight is bulls let off the throttle off the PDCC, the prior day cash close. We sold off from the 63 down to the 48.75, which is 14 and 3/4 points lower than the prior day cash close. So not much downside, and then look right into the mid 50 again, and we took off from that level. Then we just caught a bid vertical, and we got to the 69.04 overnight high. That level has just been there the whole time. It's really big. This started as a really big order flow level. 2,000 lots trading. The next day was confirmed with icebergs. It was weeks ago that this level was set. So no shock that we're at 69.04. All right. Volume so far is 176,000 contracts. Not that many. So the trading plan today is pretty simple, ladies and gentlemen. The trading plan today is this. We are removing this as our flip zone, and we are literally pushing the flip zone, I don't know, like 9, 10 points higher, and it will be here. The price is near the flip zone. Despite the fact that we're very, very bullish on structure, despite the fact that we ended up getting shorts trapped below, and then we started to push higher lows and higher highs. Kumbaya, everyone's bullish and happy. I still think that until we break 69.05, the upside isn't a lock. I know that there's a lot of buy stops above the 69.05, but if you zoom out on the chart a little bit, and you should always zoom out on the chart, you now get the clear picture. We sold off pretty hard on this day here off the 69.88. All right, big giant drop, just literally bottom of the cup is wet and falls out. Everything spills all over the place. And then the recovery, we can't even get back above 69.04. We've tried one, two, we've tried three, we've tried four, we've tried five, we've tried 6 times now, including with this overnight high, and we just haven't done it. And yes, it will eventually break through if we're gonna go up. But eventually doesn't have to be right now. And rather than be on the side of predicting where the market's going to go, I'm going to go on the side with the statistical edge from price structure. And that side is to stay on the short side until we reclaim 69.04 with some vengeance and volume. All right, so flip zone actually moves up. I put today will be a bit more challenging. I've said that a lot of days now, so I'm going to stop saying it. But the challenge isn't really, oh, it's going to be hard to trade. The challenge is we're going to be facing consolidation pressure today going into FOMC in the afternoon. We'll see some more range bound trade, but I think the morning we're going to have a chance. And this is what I'm thinking. One of two scenarios are going to happen. One of the scenarios is we're going to dump and recover for the bulls and keep going. The other one is we're going to get bullish. We're going to get bullish. We're going to huff. We're going to puff. And we're not going to blow the house down, and we're going to pull back for a big retracement. And then in the afternoon, head on to the highs. Remember this. Bullish markets open weak and close strong. Bearish markets open strong and close weak. If you don't know anything else, that's going to help you massively. All right. If we're above 60, 90, 69.05, what the heck? I just put a 9 in there. 60. Okay. Well, that's kind of nice. It's not going to be 6,005. If we're above 6,005, if we're below it, rather, we're in trouble. If we're above 69.05 and we retest, so this is now the trading plan. Okay, we do one of these, run the 16, come back to the oh 05, find some levels here, some order flow reasons to like it. Don't just put your limit there. And then we're going to get long off that 4 or 5 area. If order flow qualified, targets upside are going to be 24, 44, 57. All right, if we're below the oh 05 like we are now, we're going to look for opportunities to sell into strength, 6,900 to oh 04 being the best one. And then you do have some areas as well around 88 to 92 to join in, but we got to get order flow qualification. And I think we get an early morning push lower before the bulls step in. And we'll see if the bulls do step in. Targets down 92 and 68.80. That's what I got for YouTube. I hope you enjoyed this update. Let me see some comments. What's up, Mikey? Oh, it's Mike Schwartz. What up, brother? I hope you're doing well. It's been so long. How are things with you? I'm really happy to hear from you. Prashant says he's pretty sick, doesn't think he's trading today. Prashant, brother, I was there a couple weeks ago, last week, I think. It's so bad when you feel so bad that when you just start to feel a little better, it feels so good. And I hope and I wish that comes sooner for you, brother. Um, get well. Get well. Miss you. And I'll see you guys later. That's what I had for the morning market update today. I hope you enjoyed it. Keep it on a tight leash today. Today is not the day to prove that you're a superhero to the market. I'll let you know when that day comes. And, here's a secret for you. I don't think it's ever going to come. Never going to tell you today's the day that you have to prove yourself. Today is the day that you have to conserve your capital and think about your family and what you're doing this for. Right? Keep that in mind over trying to be a superhero. We will have some trades. We're not looking for many. We're looking for the next best trade, not any trade. This week on the podcast, literally tomorrow, 7 in the morning, I talked to you about the concept of the next best trade and the psychology behind it and how just that idea alone, if implemented properly, could literally turn your trading around that quickly. And I've had conversations with some members in our community where just one chat turned it around for them. And that's the power of words and being around the right community. So check out the podcast, YouTube. That's coming out tomorrow on Spotify. It's called Mind Over Markets on any platform where you stream your podcast. At YouTube as well, if you guys want to check out what we do in the trading room. We just finished yesterday live teaching 3 lessons about levels. All right. And it's great to be a part of a program where it's taught live because it's not really a still course of videos. It will be a still course of videos in a few weeks, in a few months when we're done the course, and then you're gonna have to watch it in that format. Now's a chance to join in and go live, ask questions. It feels more like a coaching program than anything. So if you're gonna check it out at any point, now's the time to do it. I'll see you guys inside the vault. Appreciate you, YouTube. Love you all so much, and thank you for your support and for trusting TradePro Academy with your trading needs. I'll see you tomorrow morning, which will be Thursday. Remember, FOMC minutes this afternoon. Keep it on a leash, tight leash. Bring the dog in from the park at around 1:30 because 2 p.m. it could get volatile. All right. Love you guys. Take care. Trader Pros in the room. Give me a second. I'm going to just wrap up the YouTube update, answer your questions, give you the gamma levels, and let's rock and roll for today's session. All right. All right.